Hi, traders. Here we are once again. Hello. Boom, boom, boom. Yes, we're doing it again, traders. Once again, we're doing it again. Welcome to another live Q&A session with Oliver Velez. Of course, my name is Oliver Velez, and I never want you to forget this. I am your trader for life, or at least I want to be. All right, so welcome, welcome. Come on in, get comfortable. Grab something to take notes with. Grab the beverage of your choice, guys. I am now in Colombia, Bogota, Colombia, to be exact. Enjoying some good Colombian coffee. So come on in. Good morning, good afternoon, good evening, wherever you are in the world. Welcome. We are going to conduct another live Q&A session. But before we do this, I will have to do a rather lengthy monologue today because I actually want our questions to be more pointed today, our questions and answers to be more pointed today toward a topic that is on every single person's mind on planet Earth, that is inflation, right? I think it's a very important topic. So as I've told you during the last Q&A session, I do like the general open-ended Q&A sessions, and those are not going to be a thing of the past. I will do those occasionally, but every now and then I will want to hold a Q&A session that specifically drills down into a specific topic, and usually that topic is going to be either something technical, something market related, or something current events related, or something economic related. So today, let's hit up the macroeconomic side and direct most of our questions toward this topic of inflation. It's affecting me, it's affecting you, it's affecting virtually every single person on planet Earth. And it is a topic worth delving into. All right, so relax a little bit, guys. Grab something to take notes with. By all means, guys, everything that I show you, you can take images of, you can copy, you can share. This is your talk. This is your Q&A session. This is your presentation, okay? So what I want to do is I want to go into inflation and what it means, because believe it or not, I would say more than 90% of people on planet Earth do not really have a firm grasp on what the true definition of inflation is. And so let's do a little deep dive on this first. And then after we cover, this is going to be a little bit lengthy, guys, but after we cover this, I'll open everything up for your questions, okay? So let's start with this. The first thing is, what is inflation? Most people can't tell you really specifically what it is. Now, the vast majority of people just regard inflation generically as prices are going up. Prices are higher than what they were before. And that doesn't really hit the nail on the head, as it were. It's not the real, true, correct definition. But let us take a definition from Investopedia. All right, now I want to go into this specifically here. So let's do this. Let me get this here like this. So let's look at this, because I think this is a really very decent tackling of inflation. Okay, so it says inflation is a rise in prices. That's what most everyone believes, but they stop there, which can be translated as the decline of purchasing power over time. And that is the key point about inflation, guys. It is not prices going up as much as it is that you and I are losing purchasing power. We work to earn purchasing power. We give our time to jobs and projects and companies. We give our life, our very energy, our very soul, our very time. And in exchange for this, we receive purchasing power. In the United States, we receive that purchasing power in the form of US dollars. In Europe, they receive that purchasing power in the form of the euro. In Colombia here, they receive that purchasing power in the form of the peso. You get what I'm saying. But it's not as much, inflation has less to do with prices going up, but more to do with the decline of my and your purchasing power over time. My dollar, which bought a dollar yesterday, today buys 85 cents of a product. It used to be, as an example, it used to be worth a dollar. Now it's worth 85 cents. I'm losing purchasing power as if my purchasing power is melting like an ice cube. So this is very important. Most people focus on the first part of the definition, prices going up. No, you're losing purchasing power over time. Now, the rate at which purchasing power drops can be reflected in the average of price increase, of a basket of selected goods and services over some period of time. Now, we're going to come to this basket very shortly here. Now, the rise in prices, which is often expressed as a percentage, like 8.5%, 9.1%, means that a unit of currency effectively buys less than it did in prior periods. This is what I need you, my traders, my babies, my followers. I want you focusing more on my purchasing power is eroding. All right? Because if prices go up, but your purchasing power doubles, if prices go up by 10%, but your purchasing power doubles, you're winning. That's not inflation. So inflation just can't be prices are going up, because if prices go up by 10%, but your purchasing power goes up by 100%, even though prices went up, that's not inflation. Inflation must be when you and I are losing purchasing power. I cannot express this enough here. All right. Don't think of inflation as just prices going up. We're losing our ability to use the full effect of what we've given our life for. Do you understand this? All right. So inflation can be contrasted with deflation, all right, which occurs when prices decline and purchasing power increases. Now, I'm going to end on that note after my talk. But the main point I wanted to get across to you is the true definition of inflation is when your and my purchasing power is declining over time. All right, not just prices going up. All right, so we got that out of the way. So, guys, look, remember the definition talked about how this percentage of price inflation, like 8.5%, is measured by taking a basket of items and measuring the price changes of each item in the basket, taking an average rise over those items and coming up with a specific percentage amount. This is called the Consumer Price Index, or CPI for short, right? So the Consumer Price Index is literally just a bunch of items. It's like food, energy, electricity, and shelter, clothing, medical expenses. So it's supposed to take a basket of items that virtually all of us use very regularly. Of course, we use food regularly. Of course, we can't live without energy. We can't live without electricity. We can't live without clothing. We can't live without shelter. We can't live without, medical care and things of that nature, education, and so forth and so on. So it takes this basket and measures the average price rise of each of the items in the basket. Now, what's interesting about this is that our last reading of 8.5% is we hit a greater than 40-year high on this basket of items, this 8.5%. This is down from the last month of 9.1%, but still it's historically high. It's a 40-year high. Now, I will tell you this, traders. It's important to understand that if you study world history and you go through the periods throughout human civilization where inflation became a problem, you will find that that period coincided with a decline in productivity, a decline in health, a decline in the entire human experience, a decline in creativity, a decline in growth, a decline in everything, an increase in deaths, an increase in diseases, an increase in destruction, and also an increase in wars. What are we dealing with now during this inflationary time? A war. Rarely does inflation occur in the world without war, without it being accompanied by some type of war. And we have this scenario. The last major inflationary flare up we had was in the 1970s. We were in a war-like situation with the Middle East, tensions and things of that nature. So inflation is usually coincides with war, and inflationary times usually dramatically hurts the entire human experience. All flourishing, all periods of flourishing throughout history have happened in very low to non-existent inflationary times. This is important to understand because inflation causes people to starve, causes people to not have appropriate food, appropriate shelter, appropriate energy to run their lives, appropriate clothing, appropriate medical care. It hits the human race in a very vicious, devastating way. And it's a genie that if you allow to get out of the bottle too far, it can run so fast, out of control, and it can hit the globe like nothing you and I have ever seen. All right. So it is a pretty ugly thing, especially when you put it in the context of what inflation has done to the human race historically. Now, let's move on here. This is important. We've got this basket. Now, let's look a little closer at the items in this basket. What's interesting about this basket is that in the early 1980s, I believe it was 1981, don't quote me on that, the basket was changed. You see, the US was going through ravishing inflationary times in the 70s into the beginning of the 1980s. And there was this attempt to crush inflation because it was running rampant and it was getting really out of control. So one of the tricks or one of the hacks that the US government decided to do was, let's take the basket, which is ranking everything inflation with a very high inflationary number. Let's remove some of the biggest items so that it appears as though the inflationary number is dropping. And so what they did in the early 1980s is they changed the definition of what inflation is by removing the most inflationary items. This is crazy. They removed the most inflationary items so that the government can report this falsified lower number so that it doesn't freak the world and the masses out, for lack of a better phrase. So what we're looking at now is the items that currently make up the CPI. But I want you to take a look at specific ones. Look at food, 10.9%. This is as of July. They're saying that food year over year has risen about 10.9% or 11%. Now, I will tell you this. I spend a good deal of time in Colombia. I have a home in Colombia. And I have an assistant that takes care of every single expenditure in my home. I have a chef who fixes all of my meals. Now, listen to this. My meat purchasing year over year is up 400%. I don't know how these people in Colombia are doing this. That's right. My meat budget is up 400% over the past 12 months. Not 100%, 200, 400%. This number is false. I am telling you, I know that many of you who shop know that your food has gone up more than 11% over the last year. Let's take a look at the next number. Energy. All right. Energy, guys. 33% increase. Are you kidding me? Look at the gasoline number, 44%. Guys, I know I have a Tesla, so I don't really use gasoline very much anymore, but I can tell you what I've seen. I've seen better than 200, 300% increases at the pump. No way is this just 32% and 44% over the past year. Take a look at used cars. If anyone of you has even looked at or considered the possibility of buying a used car, you know they are up way more than 6.6%. I've seen used cars doubling and tripling in price. These numbers are artificially kept low, all right? They're reported low, and they do not, in my opinion, reflect the real everyday inflation that everyone throughout the world is going through and experiencing. Shelter, are you kidding me? 5.7%. Guys, my rental properties doubled over the past year and a half. That's crazy. Doubled. Some of my properties, 33%. The majority of my properties were the rents were hiked 33% over the past 12 months. That's crazy. That 5.7% number is way off. Home sales, home prices are up something like 19% year over year. All right. Your average rent is up something like supposedly 14%, but in certain areas that's upwards of 20%, 30%, depends on your specific area. So we know that these numbers, based on our own experiences with our own lives, are artificially kept low. So that 8.5% number that is being reported here, this is more like double. Do you understand? It's more like 16, 17, 18% in real terms. All right. Now that's going to become important as we go through here. All right. Now, I like Charlie Bilelo. I hope I'm not butchering his name. He puts out a lot of macroeconomic information. I learn a ton from him. Follow him if you like. All right. Great information every single day. All right. Look at the price increases he's reporting. Natural gas, 100%. Well, they have it up 30%, 33%. Heating oil, 64%. Crude oil went north 37, 35. You get the point, guys. Gasoline, 23%. Coffee, 21%. What's interesting, the only few plus items on this, the only few negative items on this chart are copper, sugar, silver. These are price increases over the past year. So it's interesting to note this. Interesting to take a quick look at this. All right, guys, but look, I show you all of this to basically bring you to one hard, cold truth. The world is suffering from rising inflation, which, as you now know, is declining purchasing power. That's the real definition. Your and my ability to purchase the same items for the same amount of dollars, we're losing that ability. All right. Our single dollar buys less and less and less, which means we have to work more and more and more to get the same thing that we used to have to work less for. But I explain all of these things to bring you to one hard, cold truth. And it is this. The real truth, traders, is that prices do not naturally rise over time. They actually fall. I'm going to repeat that. This is the real hardcore truth. Prices are not supposed to rise over time. They're supposed to fall over time. I'm not talking about at sometimes there's a spike up or what have you. That's fine. But over time, prices are supposed to fall. They're not supposed to rise. This is very important to understand. This means that a steady and persistent rise in prices, traders, is false. It's man-made. It's artificially manufactured. Someone is doing it on purpose because it is not the natural direction. It is not the natural tendency. It's not the natural trend. The trend of prices is always towards zero over time. It is never a steady, gradual rise. And so whenever we experience a steady, gradual rise of something year after year, 2%, 2%, 2%, that is false. It is manufactured. It is man-made, and it's done on freaking purpose. It is against nature. Okay? All of this brings us to the true definition, the real, deep, true definition of inflation, which is theft. You see, traders, and specifically, it's theft of your time. Inflation is theft. That's the simplest definition I can give you. Now, what exactly do I mean by that? Remember, we said that if inflation exists, it's really the robbing of your purchasing power. So think about this. You put your time and effort into working 40 hours this week. You gave your life for 40 hours. You spent time traveling to your work. You worked for 40 hours. You spend time traveling back to your home. You gave your life, you gave your education, you gave your ability, you gave your talent, you gave your time. You spent time and you gave your time. Time is the stuff that life is made up of. So if you give your time, you give your life. Do you understand? And in exchange for your life, which is your time, you receive purchasing power. That's yours. You have earned that. And no one should make any moves that causes your life to go down in value. You earned it. You put the necessary time, effort, and work in to receiving what represents your life. There's a saying that, oh, money is not important. What do you mean money is not important? Money is the symbol of your life. It's the symbol of the time you gave. It's the symbol of the work you put in. It's the symbol of the sacrifice you gave. It is not just not important. It's not just important. It's your life. It's the symbol of your life. And in exchange for giving your time, in exchange for giving your life, you receive this purchasing power. This purchasing power should never be devalued. It should never start melting. It should never go down. And anyone who forces what you have given your time and life for and received the value for, if anyone makes a move that causes that purchasing power to shrink and shrink and shrink, they are stealing your time, which means that they are stealing your life. Inflation steals your life. Inflation steals your time. Let me give an example. I heard once, these numbers might be off, but you'll get the point. I heard once from one of my traders in Venezuela that 20 years ago, a professor had to work 3.5 hours to buy a steak in Venezuela. Today, that same professor has to work 3.5 weeks to buy the same steak. Do you see? That professor's time was stolen. It used to only require 3.5 hours of time. Now, like a slave, he's got to work 3.5 weeks to buy the same steak. Inflation, my friends, is theft of your time. And your time is the stuff that your life is made up of. And so it is the theft of your life. Now, what do we call? You tell me. I want to see your questions below, guys. What do you call an individual that has to give up 100% of his time and receive absolutely nothing in return? What do we call that person? What do we call that individual? The person who's forced to give up 100% of their time and they receive nothing in return. What do we call that? When you give 100% of your time and you receive nothing, what do we call that? We call that, as someone says, US citizen, we call that a slave. So if inflation, if you're giving up 50% of your time, does that make you half a slave? If you're giving up 25% of your time, if inflation is eating away at 50% of your time, this Venezuelan professor is slaving 3.5 weeks to buy a steak when he used to only slave 3.5 hours to buy the same steak. Those numbers might be off, but you understand what I'm saying. Inflation is the new slavery. Do you understand this? Inflation is the new theft of time. When we steal 100% of a person's time, we call that individual a slave. Inflation is just the new, more modern version of enslaving the entire nation, not 100%, but 20%, 33%. Let's go back to it. This is enslaving a nation. Look, let me show you. So let's go back, remember, to the numbers. This is enslaving. This is enslavement. This is the modern form of enslavement. Okay, so it's not 100% of your time, but look at how much more time for each item you have to give. Now, traders, look, listen to me carefully. A slave, historically, in America, very dark period, would give 100% of his time, which means that he gave 100% of his life. In exchange for that 100%, right? The slave got shelter, some sparse clothing, some food. And that was the exchange. You give me 100% of your life. You give me 100% of your time, or I take that. And in exchange for that, I give you shelter. I give you food. I give you some sparse clothing. Now, today's world, you give your time, and instead of the powers that be giving you your shelter, your food, your clothing, they give you purchasing power. They give you dollars. Instead of the item directly, they're giving you something else. They're not giving you the shelter. They're not giving you the food. They're not giving you the clothing. They're giving you currency. They're giving you money that they can print. They're giving you dollars. They're giving you euro. euros. They're giving you pesos. And now you have to take the dollars, the euros, the pesos, the yen. You have to take that and buy their inflated properties, their inflated food, their inflated clothing, their inflated oil. Do you understand that it's the same freaking thing? Either take your time and give it to you directly, or I take your time and give you this piece of paper, and then you just buy it from me anyway, and I jack the price up. It's a slicker, slyer, more quiet, smarter, stealthier form of slavery. And you have to make sure your life is dedicated to fighting this properly, to staying ahead of this enslavement through inflation. It is created on purpose, in large part, to keep you buying hyperinflated things. And the Keynesian form of economics has convinced the world that inflation is supposed to exist, that it's natural for things to go up 2, 3, 4% a year. But yet, you all remember when a flat screen television used to be thousands and thousands of dollars, and now they're hundreds of dollars. Your iPhone has gone up in value, but down in price. Do you understand? This is everything through technology trends downward. Why should a loaf of bread that used to cost pennies in 1913, why should it cost $3 and change today? Or whatever a loaf of bread is. Why? Why? Hasn't technology and efficiency gone up? Doesn't it take fewer people, less time? The price should go down. Do you understand? Prices should go down over time because of technological advancements, because of greater efficiencies. Prices don't go up unless they are manipulated. All right. And so, guys, I spend quite a bit of time educating my traders on this. See if I can get this back here like this. I guess it doesn't matter which side we're on. But I spend a great deal of time making sure my traders are up to speed on this. Yes, it's macro. Yes, it's wealth oriented, but it's important. It's important that when you're being told certain things like inflation's supposed to be, and yes, prices are supposed to go up. It's important that you understand that that's false. It's important that you understand that the numbers that are being reported to us, they're false. They're not real. It's important that you understand that it's not just about rising prices. It's about your purchasing power that you gave your life for is melting. Someone's taking that from you. That's no different from someone walking into your house and taking your stuff that you worked hard for. Now, guys, take a look at this. I want you to be aware of some inflation indicators, and then I'm going to open things up here for questions. But there's certain things that I want you to watch. I want you to watch copper, because copper is a leading indicator for inflation, right? So when you see copper prices rising, there's great demand for everything. Copper is in virtually every single thing on planet Earth. And so if copper prices are steadily rising, everything on planet Earth is there's great demand for virtually everything on planet Earth. And when you start to see prices decline in copper, what's happening is that demand for virtually everything on Earth is declining. And so it's a leading indicator. The rising prices of copper that you see here, these rising prices, right, were foretelling the inflation forecasting, inflation is going to hit the world a year later. Inflation is going to hit the world a year later. I'm going up steadily. Watch out. I'm the leading indicator. That's why they call me Dr. Copper. And that's really true. Copper has this nickname in economic circles, Doc Cop, Dr. Copper, because it's one of the most accurate leading indicators of where inflation will be about a year later. Now, so you can see that copper was rising the year before, foretelling that a year later, you're gonna be running hot. Now we see copper on the right-hand side of the chart starting at a very significant downward movement, a downward trend, which I presume will continue. This is foretelling that prices will start to drop. Inflation will start to ease about a year from now, maybe 18 months from now. Maybe we don't go back all the way to the false CPI number of 2%, 2.1%. Maybe we hover around 4% and stay there for a decade or so. But we should be coming off of the highs here over the next year to 18 months, right? According to Dr. Copper. So it's important to keep an eye on copper, guys. The other thing that you want to keep an eye on is crude oil, because crude oil is a very big component of the CPI index. Its weighting is fairly heavy. So when you see crude oil prices starting to pull back in, as you can see on the right-hand side of this chart, starting in June, all right, crude oils have started a very significant, well-defined downtrend. That is also projecting that an easing of the inflation several months from now is likely to start creeping into the numbers. These are leading. It doesn't happen right away. You need several months, 4, 5, 6 months of decline, and boom, you start to see the effect of that 4 to 6 month decline in oil prices starting to seep into the world. Remember, guys, we need crude oil for virtually every single thing on planet Earth, no matter what the what is it, the ecologist and the green movement says. Everything requires crude oil, all right? And so it's a very important leading indicator of what type of inflation scenario we're likely to have 6 months, 7 months, 8 months down the line as well. And so with crude oil declining over the past couple of months here, it's projecting some easing of the inflationary pressure, all right? The other thing I want you to keep an eye on is gold. Now, it's really interesting. As many of you know, I'm constantly harping on the fact that gold is broken. That is why I sold every single ounce of gold I had. And I had a significant stash of gold, which I completely got out of. All right. In my opinion, gold is being demonetized in large part by Bitcoin. Gold is broken. It used to be the perfect inflationary hedge. But as you can see, throughout the highest inflationary prints that we've had in 40 plus years, gold's in a downtrend. It's broken. It has served its purpose. It's the 95-year-old who can only tell stories about his past, but can't really do what he used to do in his past anymore. He can tell stories, but he can't do what he used to do. The baton, in my opinion, has been passed to Bitcoin. Bitcoin is demonetizing gold. Gold is still currently around $11 trillion market. The vast majority of that value will over time seep itself out of gold and into Bitcoin. That is my thesis. And that is why I believe, that's one of the reasons why I believe that over time, not year by year, month by month, but 5 years by 5 years by 5 years, you will see Bitcoin rise forever, 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 ever. My mom used to say, Oliver, don't say forever, mom, forever. I'm sorry, forever. Right? Gold's been rising for 5,000 years. Silver rose for 9,000 years, right? Equity markets have been rising for 180 something years in the United States. The bond market's been rising for 300 plus years, forever. Right? Bitcoin's only 14 years old. My God. Right? So gold is being demonetized, but still, when you see sharp drops in gold, it's actually still somewhat of a leading indicator that inflationary pressures should start to ease a little bit. Now, I want to show you the 10-year returns of various things, but I want to highlight Bitcoin's 10-year return. 206, almost 206,000%. Tesla's number 2. It's not even in the same galaxy. It's not even in the same freaking universe. It's not even in the same reality. And it's second place. That's how far ahead Bitcoin is beyond everything else. All right. NVIDIA 5,000. My traders own Tesla. My traders own NVIDIA. We have owned Netflix. I don't own it now. I sold a big portion of my Amazon, which I've had for 20 plus years. I still own Microsoft. I still own some Apple. I do not own Google. And I got rid of all my gold. Interestingly enough, gold is at the frickin' bottom of the list. Gold has largely failed. I'm sorry if I'm disappointing any gold bugs out there. I used to be a gold bug, but I can't fight these numbers. It's broken. All right. Last thing I want to show you here. This is gold against Bitcoin, which means this is gold price in Bitcoin, which means that Bitcoin is demonetizing gold. If you price gold in Bitcoin, this is what gold is experiencing against Bitcoin. It is trending toward zero. All right. It's important to look at a lot of things priced in Bitcoin, especially in these inflationary times. And so this is gold priced in Bitcoin, not priced in US dollars. This is gold priced in its competitor, Bitcoin, and it's losing, and it will continue to lose. All right. All right, guys. I will come back to this, but I do want to take some of your questions here. I know that was a little lengthy, guys, but I thought it was important for me to get this message across. Now, my traders, especially the traders in my wealth program, they know this like the back of their hand. This is boring to them. But I do believe that it's important during these times to sort of have a grasp on what real inflation is, what its significance is. It's not a small significance. And I believe it's important to understand the urgency of making moves that help you stay ahead of the inflation monster, because your purchasing power is just getting smaller and smaller and smaller and smaller, which means that basically everyone's becoming more and more and more of a slave, because they have to give more of their time in life to get the same item back. All right. All right, guys. Space Vibe Z says, guess I'll hold off buying more physical. I used to buy physical. I had a vault in London of gold. I wanted to sell all of my gold and move it into Bitcoin. Bitcoin's price at the time was $16,000 a Bitcoin. When I wanted to do this, it took freaking months for me to unwind this yellow rock. Do you understand? And by the time I got all of it back, Bitcoin's price was in the 40,000s. Do you understand how much I lost? From 16, 18,000 to 42, $44,000 because it took that long to get rid of that freaking yellow rock. It would have taken less than a few seconds to get rid of that in the Bitcoin market. It's broken, it's gold, it's old, it's heavy, it's clunky, you can't move it, you can't transfer it, you can't barely verify it unless you spend tens of thousands of dollars. There's fake gold out there. It's not as scarce as everyone claims it is. They're finding gold every single hour of the day. No, 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 no more, no more. Sorry. Mole Mandela saying, Oliver, what is your book written by you? So I have 5 books, guys, that are translated into, written in 5 different languages, 5 and 5. And you can just search on Amazon if you like. You can just search Oliver Velez books, okay? And you'll see all of my books in all the various different languages. Brian Dillon is saying, so gold isn't that liquid? Heck no. Heck no. You try bringing a brick of gold and seeing how quickly you can liquidate that. I got this is $2.1 million. I want to sell this. First of all, somebody's going to demand that it be verified. How do I know that's real gold? How do I know that there's not tungsten in the middle of that thing? We got to melt this down. We got to find an honest appraiser, because they're not all honest. Verify that the appraiser is honest. Then we got to go through the process of having this guy melt it down, go through all the tests, all right, qualify its purity, then unmelt it back again. You know how long that freaking process is? Now you try taking this brick of gold for $2.1 million and go buying a hamburger and a vanilla shake. It's freaking for the caveman times. You understand? It doesn't fit in today's digital world, traders. We are in a digital society. Your pictures are digital. Your music is streaming. It's digital. Your mail is digital. You no longer freaking lick stamps and mail letters. Oh, I got to run to the mailbox and mail this letter. You send a freaking email. Your mail is digital. Your photos are digital. All right. Your movies are digital. Your music is digital. Do you remember the old movies where there used to be black and white movie, some dapper guy in a suit? I would like to make a long distance call to London, and the movie would switch to a phone operating room with a bunch of female, all right, long distance connectors. Oh, I'll handle that for you, sir. And she takes the cord, pulls one cord out of the board and puts it into another cord to connect the guy to London. Do we have that today? No. They're digital. I dial London and it does it digitally. My phone is no longer analog. I no longer pick up the phone and remember those? And to pick up the phone and dial it. I hated numbers with 0 in it because that was the long one. It's a freaking digital phone. Everything is digital. So the analog world has disappeared for the most part. And gold is in the analog world, guys, right? What is going to be the most valuable things in the future is that which is not physical. Everything physical is going to lose its value. Your You have more digital photos here than in any physical photo album. I promise you. You send more digital emails than you write letters. You can't even show me. You have access to millions of albums on this thing. You do not have millions of physical albums or cassette tapes or CDs in your home. So whatever's digital is bigger, better, and more valuable. And whatever's physical is losing its value. And let's think about this, guys. Not to wax too philosophical with you here, but isn't the most valuable things we aren't the things that we value the most in life, aren't they not physical? Love. Can you touch it? Can you feel it? You can see acts of love, but can you actually touch or feel love? No. Happiness, peace, honesty, decency, honor, liberty. The most valuable things in life are non-physical. Do you remember in your studies when the world largely worshiped physical gods? The Incas would sacrifice their children to a physical freaking god. Do you understand? They used to worship calves and physical statues. The vast majority of the world's gods are what today? Non-physical. We've gone from physical gods that you can touch and go visit and sacrifice to non-physical. Everything in life moves to non-physical. Remember, houses used to be lit by lamps. You used to walk around with a freaking kerosene lamp. Now it's electricity. You better not try to touch electricity, but it's freaking invisible. It's an intangible now. Do you understand? And so this idea that just because it's not physical means it doesn't have value, you are freaking missing the whole movement of life. It's crazy. And guys, I would even go as far as saying that we are becoming more digital. The human race is becoming more digital. Let me give you an example. I am Oliver Velez, and I have a certain level of intelligence, okay? But if you put this in my hand, I am more intelligent than just Oliver Velez without it. With it, I become more knowledgeable instantly. I have more information, access to more information instantly. Do you understand? I am a greater man of the world. I can find answers to problems much faster than the Oliver Velez without this. So I, Oliver Velez, am part digital and part human. What's interesting is that the digital part of the human race is actually growing and growing and growing. The time you spend on your computer, the time you spend on your, which is digital, the time you spend on your phone, digital, the time you spend televisions and so forth, it's consuming more and more of the human experience. The human being is analog and is being joined by the digital, and the digital is consuming more and more of the analog human. This is just a fact of life, guys. I'm sorry for ranting. I hope you guys don't mind that, but these things are things I'm passionate about. And look, you're my follower, you're my subscriber, you're my trader. I want you on point. Do you understand? I want you aware. I want you more knowledgeable than the vast majority of people out there. All right. Space Vibes, he's asking, Oliver, are CBDCs, central bank digital currencies, a threat to Bitcoin? Absolutely not. A CBDC is nothing more than a digital form of fiat currency. So if the United States were to come out with a CBDC, a digital dollar, it's already digital, but this new CBDC would make basically all physical money completely useless, and it would be programmable money, which is a very scary thing. Would it be if everyone had to now use this digital US dollar that they control? Would any would anything be different? No, it would be worse and better for Bitcoin. Worse meaning that it's easier to just create digits out of thin air. It's easier to just zap free money to a digital account out of thin air. But it's scary, these CBDCs, because it means that privacy is 100% gone. And it means that you become more of a slave with a CBDC with zero privacy. Let me give an example. Let's say, for instance, that your government has a CBDC and it decides that, you know what, we believe that your taxes should be this, and zoom, and they just zap it out of your wallet. You're like, what the heck happened? That my balance is down by $14,000. They just zap it out of your account and say, okay, if you think it's different, then file these forms. Or what if it say, okay, look, this group is going to get 1% interest on their CBDCs, but this group I don't like very much. I'm going to give them 0% on their CBDCs, right? It's just a scary control. It's a scary thing that will give governments total control over the self-sovereignty of individuals. It's a very dangerous thing. It's something we should fight. But if it were to happen, it would cause a massive global worldwide influx into Bitcoin, because Bitcoin is that digital currency that no one can control on planet Earth, the only one. And so that would freak the world out. That would freak Americans out even more, and it would cause Bitcoin to be adopted at an even faster rate. Also, it would train the nation that a digital wallet is no big deal, which is still somewhat of a barrier for a lot of people entering into the Bitcoin community, right? I don't know how to work it. I don't know what a digital wallet is. I don't understand these things. But if you were forced to have a digital wallet because that's how you got your government money, then now you're educated on digital wallets. Now it's easier to adopt Bitcoin. So if CBDCs, in my opinion, were to become a reality for your Western societies, right now China is the only one with a full-fledged CBDC. I just believe that it would speed up the adoption of Bitcoin, in my opinion. That's right. T.S. Leong is saying social credit scoring, it's the democratic process. Yeah, so CBDCs can, China does social credit scoring. So for instance, like, what if, every single expenditure is going to be tracked, but what if you spend things on things that your government doesn't like? So you spend things on, I don't know, guns to protect your family. And the government doesn't like that. So it sees what you're doing. See, with cash, there is a form of privacy. All right. When you eliminate cash, you eliminate the privacy function of the fiat currency. That is what governments want, but it's going to be hard to get the people to give that up, in my opinion. All right. What else, guys? Brian says, I love how you're trying to get people wealthy. That's true. I'm trying to also wake people up to a certain extent. And that's not to say, guys, that I'm some super aware, woke person on everything. No, But in certain very narrow spaces, I am, and that's where I can help. And so if you follow me, I just want you aware. I want you awake. I want you aware. I want you to understand that enslavement still exists. Was physical first, and now it's non-physical. Just what we're saying. It's through inflation. All right. It's through inflation. And financial slavery is more universal than slavery based on a color or a religion. You understand? Or a social class. It's everybody. There are ways to combat it, though. What is your idea about ETH and other shitcoins? I'm sorry, other guys. Look, I'm a Bitcoin maximalist. I will tell you that when I initially got into the cryptocurrency space, it was Bitcoin and ETH largely, and Ethereum largely, and I did make a I did do extraordinarily well. But as I went deeper and deeper down the rabbit hole, I just realized that most of these things are just unfinished projects, they're promised projects. Most are not even complete projects. They're just promises. And they're VC money grabs. I've been through this in many cases. I lived through this 2 times. I lived through this through the dot-com bubble, where there were every single hour of the day, there was a new company coming into an existence as a dot-com, and their stock would just go through the roof. Companies were changing their names. Old companies were changing their names and putting .com at the end, and their stock would go. There were like 20,000 .coms at the top of the market. Sound familiar? 20,000 nonsense cryptocurrencies at the top of the market. 20,000 .coms at the top of the internet bubble market. And when that market burst, guess how many survived? Guess how many survived? Anybody know? Huh? 2. You know which 2 they were? Out of 20,000, 2. You know which 2? You know which 2 they were? Amazon.com and Yahoo. That's it. Amazon and Yahoo. When's the last time you did a search on Yahoo? There's one winner. We already know it. It's Bitcoin. Stop freaking fooling around. We've got the Amazon of the cryptocurrency space. Stop fooling around. All right. T.S. Lawrence is AOL. AOL actually went the other way. They stopped being a .com by merging with Time Warner, remember? All right. Calvin Geese, I hope I'm not pronouncing it wrong, but Calvin is saying, I stopped watching Peter Schiff to watch Oliver Velez. The biggest difference is gold versus Bitcoin. Everything else is pretty similar. Yeah. Well, I appreciate that, actually. Hey, Oliver, is it a good time to put some money in Quid? I don't actually think so. I will tell you this, guys. Look, I still believe that we are in a bear market. And it's important to understand that historically, bear markets have really powerful moves to the upside. These moves to the upside can be as powerful as 50%, 40%, 60%, and it's still a bear market. These powerful bear market pumps to the upside sucker people into them and then slam them again. All right. And it's important not to get fooled by these powerful bear market rallies. We're still not out of the woods. We're still in a bear market. We're still in a bear market. this rally is a bear market rally. All right. And um, so it's important to understand that. I would say that there are better ways now, in my opinion, to get more alpha on the downside. I want to go into specifics now, but there are specific collection of items that you can play and get better returns and position yourself better than quit at this particular time. Um, Carlos Galvez, Oliver, you are the best. Thank you. Thank you very much, Carlos. Do you use order flow as part of your strategies? Um, I'm not quite sure exactly what you mean by order flow, but uh, if you're asking me, because order flow is a form of volume. Now, I'm not a big volume guy. I used to be back in the 1980s, early 1990s, when volume really meant something. Today, volume is an overrated indicator unless you're dealing with junk like penny stocks and things of that nature. But if you're dealing with quality, the quality part of the market, volume today is basically just not all that reliable, largely because the reporting requirement for volume has changed over the last couple of decades. For instance, I used to hide 80% of my orders through dark pools of liquidity. And so my orders, I'd be putting hundreds of thousands of shares into the market, and that would not show up in the volume number until the end of the market day. So I would route these big orders through dark pools of liquidity. I had access to 11 dark pools of liquidity, and I'd split the orders up over all 11, shoot them over these 11, shoot the orders through these 11 dark pools. And the reason why they're called dark pools of liquidity is because they're completely dark. No one can see anything. And at the end of the day, those dark pools would basically calculate everything up and boom, do one giant posting at the end of the day. And so throughout the day, if you're looking, you wouldn't see my volume. You wouldn't see me stepping into the market. You understand? And so it's just not as reliable as when those things did not exist. And as and and remember, guys, when I started in the early 1980s, this game, the level of market play by the worlds was nowhere near where it is today. It was much lower. And so when you're dealing with a lower, lighter traded thing, and an elephant comes in and spikes the volume, that's very significant. But when now everybody's a freaking elephant, nobody spikes it that much. So it's just not as reliable of an indicator as it used to be. All right. Okay, let's see here. How to make a detailed written business plan as a trader. Now, as a business plan as a trader, okay, that is distinct and different from a trading plan. Now, I just did a technical analysis session on how to build a trading plan, right, through the 7 parts of a trade. So if you're looking for that, there's no better resource, in my opinion, than that past session. All right, right here on this channel. If you're talking about a trader, if you're talking about a trader, what's the question here? If you're talking about like a plan for your life as a trader, right? That's a very, very different thing. And that's very specific. That's very individualistic. It would be hard for me to sit here and say, this is how you build a trading plan for your life when everybody's life is completely different. I will give you some general things. You should be mapping out your journey as a trader. And most people are not mapping out their journey. And most people are starting from the wrong side. You've heard me say this many times, guys. You have to start from the losing side. So all of your goals in the beginning must be about losing properly. So the first goal is to lose less, to stop hemorrhaging money. We've gone over this. That's the first goal. So the second goal is, once you are not hemorrhaging money, let's tighten up and minimize, or let's say, let's cut in half your average loss per trade. So hemorrhaging is a different type of loss. Once you stop hemorrhaging, that's goal number one. Goal number two, the next step, let's take your average loss per trade and let's get that cut in half. That's goal number two. Once you've got your losses that you take controllable, they don't do you great harm. They're never comfortable. They never make you smile or anything. But at the same time, they never take you out of the game. Once you can honestly say, I don't lose in a way that will ever take me out of the game. Once every single loss meets that requirement for a while, all right, you're ready for the next step. You're ready to start working on trading strategies. You need 4 key trading strategies at a minimum. And you start taking those 4 strategies or those 4 plays over and over again and collecting your trades in batches of 20. Remember that? After you get 20 trades, you sit down and evaluate. You find the errors that were made. You pick the biggest error, and then you use the next 20 to conquer that error. You take the next set of 20, investigate. What are the errors made? Pull the biggest error out of the second 20. Now the third set of 20 is dedicated to not committing that error the next 20. After that 20, you do the same. You repeat. You always pull the biggest error out, and you use the next set of 20 not to make money. You don't focus on making money. You focus on killing a problem. When you kill 5 problems, I promise you, you get 5 problems out of the way, you're trading better than you ever thought you could. Your problems are blocking your profitability. But everybody wants to keep the problems and go straight to making money. How is that? If the problems are blocking the money and you don't want to eliminate them, you want to keep the blockers and then try to profit, but they're blocking you. You must remove the blockers, the people, the things, the items that are blocking your profitability first. So how can you focus on becoming profitable first if you still have things blocking profitability in your face? So the first thing is getting losses under control and then killing the demons that are standing in the way of your profitability. Focusing on profitability is further down the line. Everybody's got this backwards. You understand? They're trying to be profitable now. You're not going to be profitable in the beginning because you've got these big, giant, hefty, ugly demons blocking the entrance to the land of profitability. The land of profitability. That's where I live, by the way. Okay. So that's how you kind of map out a journey, step by step, that way. All right. All right. That's right. Yeah. Don't focus on making money. Focus on killing problems. You've got it. That's it. I like that. All right, guys. All right. Ricky saying, Oliver, after every 3 good trades, I always get a small fail. That's fine. 3 good trades, then a loss. As long as the loss, guys, you have to make sure that your loss makes you feel like, oh, all right, I can get that back. If your loss is that way, you're losing properly. If you say, I can get that back, I get that back on the next trade. If it makes you feel like that, your loss is controllable. But if your loss makes you depressed, it's too big. If your loss makes you want to slam the keyboard, it's too big. If your loss makes you want to seek counseling, it's too big. If your loss makes you embarrassed, it's too big. Guys, you lose your way to success in this game. You do not win. You become successful through the process of negation. You know what the process of negation is? Not this, not that. So you have to go on an expedition to discover what trading is not first, not what proper trading is. You can't find that. You have to, because too much stuff is blocking proper trading. So you must remove, not this, that's not proper trading, remove it. This is not proper trading, remove it. This is not proper trading either, remove it. This is not it either. This is not proper trading. When you remove enough, you'll be able to see, oh, there it is. There's profitable trading. There's proper trading right there. It's in my face now. These things were blocking it. It was always there. You have to remove what's not proper trading first to be able to know what proper trading is. It's called the process of negation. Everybody wants to keep this in front of their face and become profitable traders. It doesn't happen that way. Life doesn't work that way. And let me just tell you this. Speaking of Bitcoin, Bitcoin operates off proof of work. Ethereum is trying to change to proof of stake. Big mistake, stupid, dumb, in my opinion. We're trying to escape proof of stake systems. We exist in a proof of stake, slave-driven society. Slavery, financial slavery is possible because of proof of stake. Proof of work is what we want the world to be. When you think of it this way, if someone sees that you're a successful trader, you want your success to be living proof that you have put work in. You want your success to be proof that you have conquered the demons. You have got the losses under control. You put the time in. You sacrificed to become disciplined. You went through hard times. You lived through these depressing moments when your losses seemed like they were never going to end. You put the work in. Your success should be proof that you worked. It should not be, your success should not be, oh, he's successful because he was born that way. That's proof of stake. Oh, he's successful at trading because he cheats. That's not proof of work. That's proof of cheating. That's proof of stake. You don't want to be successful because you were born into a rich family. You don't want someone to say, oh, he's not really successful. It's because his dad just handed the successful business to him. That's proof of stake. You want everything that is valuable to be living proof that work was put in. This was not given to me. This was not handed to me on a silver platter. I did not cheat this way. This was not gifted to me. I did not cut corners. This success is not because of who I knew. This success is not because of my connections. This is because I freaking sacrificed and I worked. That's proof of work. I get this all the time, but Oliver, it's so difficult. It's supposed to be difficult. Successful trading is supposed to be difficult. It's supposed to be hard. If it was easy, it wouldn't be worth anything. If everybody could be successful as a trader, it wouldn't have value. You wouldn't even want to be one. If every single one of your neighbors was a successful trader, and they said, one neighbor asked you, like, what are you? I'm a successful trader. Everybody's a successful trader. I mean, what are you really? It's supposed to be hard. It's supposed to be scarce. It's supposed to have a high failure rate. You should want trading to have a high failure rate. You should want it to be hard. You should want it to require work. You should want it to not be easy. You should want it to take time, because all of that is what makes it valuable. It's what makes it desirable, and it's what makes it scarce. Value is in scarcity. And if everybody could do this, it's no longer scarce. Stop being upset that it takes time. Stop being upset that successful trading requires sacrifice. Stop being upset that it doesn't come overnight. Stop being success that it requires work, dedication, day after day after day. Stop being upset that it's hard, and stop being upset that it has a high failure rate. These are things that you wanted to have. You got what I'm saying, guys? All right. All right, guys, look, I got to take you back to this. You guys are just so amazing. All right, so look, guys, I don't know what you're doing on these dates here, 10th, 11th, 12th of September, but if you can manage to get free, if you can manage to travel to Cancun to spend some time with me, 3 days to a week or so, we're gonna have an amazing time. From the shores of some of the best beaches on planet Earth, some of the best food, great drinks too, if that's what floats your boat. Um, I'm going to teach you what gave me my name on Wall Street. I'm going to teach you what led to me being able to start a company that became the most respected, one of the most respected, one of the largest advisory organizations on Wall Street in the space back in the 1990s. I'm going to teach you what everyone looked at me and said, wow, it was my ability to pull profits in large quantities out of the market in the first 20 minutes. This, do you understand? This was not done. This was unheard of at the time. No one traded the open. Everyone sipped coffee for the first 20 to 30 minutes because the general consensus was we have to see which way the institutions are going first. At the open, we don't know which way they're going first. So they would wait for a trend to develop over a 20 to 30 minute period and then play that trend. All right. This was the general thesis on Wall Street. I broke the rule and started to become quite popular on Wall Street because of it, to the point where I said, I should have my own firm. I should not be doing this for someone else where they get all of the claim and glory. And I started my own firm because of this talent. So I'm going to teach you over these 3 days, and then 11 weeks after, this is an 11-week program, I'm going to teach you how to pull markets out of the market. I'm going to teach you how to earn your living out of the markets 20 minutes a day. It doesn't mean that you should only trade 20 minutes, but if you wanted to, you're going to be able to. And this goes across any market for the most part. Right? So if you're free, please come down. It's my last live trading event of the entire year. Right? We are doing this event online, I believe in November or October. I'm not quite sure. You can go to olivervelez.com and check it out. But this is my last live one, and live events are just they're not replaceable. Okay, guys. Don't forget, guys. Tomorrow we have an open house for my VIP trading club. I want you there. This is absolutely free. I am lifting the curtain to show you what we do every single week of our lives. I have a VIP trading club. This club is designed to every week have you take an extra step in your journey toward trading mastery. We trade together at times. We study the markets together at times. We go over concept, trading strategy by trading strategy, one at a time. We review trades, my trades, sometimes your trades. This is the most, in my opinion, this is, out of everything I offer, this offers the best value for the dollar in this industry. All right. So tomorrow, I'm inviting all of you to come on board and experience a VIP trading club session. It's absolutely free, no obligation to do anything, right? So register right now, viptradingclubs.com/open house. We're doing it tomorrow, Thursday, 4 p.m. All right, I'll be in my home in Medellin at that time. All right, guys, so look. Oh, also, don't forget, I haven't forgotten you. Technical analysis Thursdays tomorrow too. So we've got two things going on. Technical analysis Thursday and the VIP Trading Club open house. All right, guys, look, I know that there are so many things you could be doing at this moment, but you're here with me, and it's something that I never take for granted. Every single time I'm offered the opportunity to be in your faces, every single time I'm offered the opportunity to grab a mic or be on a stage or have a live session, I really do my best to deliver something of value, something that I believe can touch your life and affect your life positively for the rest of your life. I hope I've done that here today in some small way. And if I haven't, then I promise you I'll get better. All right, guys, listen, hit the like button. Love your comments. Your comments really do matter here. Hit the like button, make a comment. Um, Subscribe if you haven't subscribed yet, guys. Click the bell in the upper right-hand corner. All right, make sure you turn all notifications on. I don't want you to miss a single thing, and I don't want to miss you. All right, thank you once again. I will see you all tomorrow for the Technical Analysis Thursday and the VIP Trading Club Open House. Love you to death, and we just completed another Q&A session. Boom, boom, boom. Yeah, love you guys. Ciao for now.